Hey guys, thank you for joining me. It is what is today? The Tuesday edition, September 9th of the Through a Trader's Eyes podcast. If you've never watched a podcast before, it's really just me recording my screen, and you guys can listen in and see what I'm looking at. Well, the stock market had a pretty nasty day, especially relative to what we've seen the last several months, right? Anytime the markets are down, you see the Dow Jones down 100, it kind of feels really, really bad. Most of the indices were down 60 to 70 basis points, or 0.67 to 0.7%. But the Russell 2000, which has been a problem all year, is now negative on the year and was down over 1% today. And we'll get into that in just a minute. And we'll also get into Apple. That was kind of some of the big news and really was the tail wagging the dog today to some degree. Well, here's the S&P, and of course we've been in this zigzag pattern for some time, and nothing has really changed yet. We are seeing this, do these patterns, and we just had another little V bottom, but technically this one should have gone up to here, shouldn't have, and it didn't do that. So, that could be a worrisome sign for investors. The next thing we would look for, of course, is if this comes down to here and breaks this, then the 200-day moving average would come into play. But if that does break, it would be the first time that trend has broken in some time. So let's watch that. 1990 on the S&P was kind of a critical level, because you can see, I'm going to zoom in here, all these little lines show where the market had bottomed each day and reversed course, and today it broke through that level. And so we went on down through that, and of course the selling kind of intensified. So not a lot to do. I will tell you that I did short one sector today in our tactical strategy. So we are short one sector that has been doing very well, and I'll just give you a hint that if interest rates go up, this sector should go down, which is kind of what we would want. So we did that today, but holding a little bit of cash in our tactical trading strategy and just seeing if this market pulls back a little more. Remember, it hasn't given you many opportunities. So if we get 2 or 3 days like today, and you've got idle cash, unless something changes, that money shall probably be put to work. Now, look at this. If you go back and look at these V-bottoms, you've had these times where it has, gone straight down, it V-bottomed, and then it moved sideways for a while, and then it went up to another level. So again, that's really the pattern we are starting to see here as we've moved sideways several days, kind of hovering around that 2,000 level. So don't be surprised if we don't get this real easy pullback, and it just kind of gyrates back and forth, hovering around that 2,000 level. The Dow Jones is hovering around the 17,000 level, kind of doing the same thing, although it's made a cleaner little double top there. So watch that. Overall, though, today, gold got a little bit of a bounce. You also saw some weakness, still further weakness in junk bonds, which is concerning to me, because there's a tight correlation. When junk bonds are underperforming treasury bonds, which they are, the stock market tends to follow. So watch that, because that's been happening for some time now. So junk bonds were very weak today. And, of course, we got a little pop on the volatility index. The easy buy, of course, would be up here. Here's where it peaked last time we had that market bottom. An easier buy would be up if it did surpass 20. And then we look at the Russell 2000, which didn't quite get up to the top either, and is struggling, and still, like I said, is actually negative on the year. So if you've owned majority of your monies in small companies, you may be taking a loss so far this year, whereas most of the other indices are positive. They're not positive by a lot, but they are up a little bit. The clear winner this year has been treasury bonds, surprising enough, and now that may be reversing, as even today, treasury bonds were down a little bit, even with the Dow Jones down 100. Normally you'd see that money flow into treasury bonds. Hasn't happened. And this sell-off we've been seeing the last few days partly has to do with David Tepper, who said the bond bubble may be ending, and that's why you've been seeing this TLT go down, or interest rates going up. Now let's get to the bigger news of the day, Apple. Apple, of course, had their event today. They unveiled a new iPhone. Really nothing surprising. They unveiled a new iWatch. It was interesting, though, to watch the stock, and we've been talking about this, that Apple right now, We wrote an article on it. We talked about it on the radio show, but a lot of movement today, a lot of volume. But we said, look, if Apple breaks this trend, which technically hasn't closed below it now, and who knows, it may find support here. But if it breaks, you probably are looking somewhere in the low 90s and perhaps even around $90 a share, which would probably be a pretty good buy. But Apple comes out with this new, bigger iPhone. So they have different models, different pricing, and so forth. But they also came out with the iWatch. Now, what was interesting about watching this was as the day went on and they were unveiling what they were doing, the stock was going up, and it was up almost 5% at one point. Now, the options market, we'd put this on Twitter, the options market had priced in a 4% move. We had a 5% move to the upside. As soon as the iWatch was unveiled, it actually started to go down and actually turned negative on the day and finished down 0.36%. So somebody bought at 103 up here. A lot of people bought. All of these people right here bought at 103, and now they're sitting there with about a 5 to 6% loss immediately. Hopefully that wasn't you. So nothing was wrong with the iWatch. It's actually got a lot of neat features to it. The problem is that it almost has too many features, and this is the first iteration of it, but it already looks like it surpasses what else is on the market. I'm just really confused about who will use this. At a starting price of $399, I think that could wipe out some teenagers from using it. But the bands being swapped out. It's a very pretty watch. It does a lot of powerful things. It's got wireless charging, which I think is important. But at the end of the day, again, did they wow us? When I first saw it, I said that's a nice watch. But they didn't surpass anybody's expectations just yet again. And so again, that's the problem. These events are becoming more and more boring without Steve Jobs, and Tim Cook's just a boring dude. What can you say? And right now, a lot of technology has gone into this, and I think it's great. I just don't know because it's a new category, who's going to use it and what are they going to use it for. So we'll see. And the other situation that I'm hearing about is, do people want another device to think about as far as, okay, you've got your iPad, you've got your iPhone, you're going to have an iWatch, and now you got different sizes to choose from. There's so many different products out there. It's becoming kind of confusing. So we'll see how that plays out. But, as far as a stock is concerned, I mentioned on the radio the other day, we don't own this in any of our strategies except for our dividend strategy. And our dividend strategy is basically, this is the type of company I think this is now, which is it's a company that's going to continue to raise their dividend. It's not an expensive stock, but I don't know if the growth and the margins are going to be there anymore. And so having said that, it's a different type of investor that has been and should be owning this stock. So that, therefore, we don't have it in our growth strategies. We have it in a dividend strategy. And that's about all there is on that. But you can see the indecision here with these long bars here that investors didn't really know what to do with it, but it's not shocking that Apple typically does fall after an announcement. At least they have in the last few years. So again, it hasn't broken just yet, and it's not like it's got a PE of 200 or something. It is still a reasonably priced company, but I don't know if everybody got wowed or not. But I do think that they will sell. I think on balance it was probably still positive. I just don't think it was the wow, but it's certainly better than some of their other events in regards to the types of products they were unveiling. At least the last time they were just tweaking some things. This is a big, different type of phone, and it's a totally different category with this watch. And there's no question there's going to be some early adopters who want to jump on that. But I still don't know what everybody would use it for just yet. So, we'll have to wait and see. But I do think the stock's still okay. I don't think it's necessarily in trouble. But if it does break this, range, this trend right here, don't be surprised for it to fall back, down into at least maybe around $90 or so. And that would put it back at a little bit below the old split level. All right, going to keep it short today, but thank you very much for joining us. Hey, don't forget, we've got an investor CrossFit session for those of you in the San Antonio area. We are going to be covering, it's going to be next Tuesday, so a week from today. You do have to register online, or you can call at 210-526-0057. But if you want to come to that, you register online, and we will get you a seat or two. And we're going to be talking about Dow 17,000, whether it's a top. We're going to be showing tons of our different indicators we use, and also discussing some of our 5 investment themes right now that we like, and also how to combat inflation, because it's not gold. I'll tell you that. All right, have a wonderful evening, and we will talk to you soon.